think the other big variable, which it feels like we're pretty close potentially to hitting, is quantitative easing versus quantitative tightening. That may be a 2025 change. I'm not sure if that'll change this year, but it should be on the horizon next year. And yeah, I mean, that's just liquidity getting pumped back in. The things that I am curious about are how much of, a month and a half ago, there were $14 trillion in money markets in the US. Where does that money go?
Hey everyone, this episode is brought to you by Supra, the vertically integrated L1 for super dApps. They have a very cool new product coming out called Supra Containers. So head over to supra.com. That's supra.com/containers. So if you're building on an L1 and it feels a little bit crowded, or the complexity of L2 and L3s are getting you down, just head over to Supra. They'll get you sorted. Thank me later.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another Roundup of Bell Curve. You got Michael's 1 and 2 Vance. The fellas are back. It's been a minute, guys.
Rip it and rip it. We're back.
It's a lot has happened in how many weeks has it been since we did one of these? 3 weeks?
3 weeks, maybe a month, something like that. Too long.
Yeah, I mean, we were traveling in Token2049 Breakpoint, which we'll get into. We had our AGM, which is basically like all of the LPs of the fund came to SF and talked about current and future plans, and we also got new headshots done.
Let's go.
Have you looked at them, Michael?
No, I haven't seen them.
They're good. I mean, when you get headshots done, they give you like 100 photos. Some of them look like we're like the leasing team for the building, like Douglas Elliman, like about to lease you some office space. There's some really good ones though. So headshots dropping soon. Big alpha.
That's huge. Once we had someone come in. I don't think we've gotten headshots taken since like 2019 or something like that, which is just so dumb. But the photographer was like, have you heard of squinching? Have you heard of this? It's something that everyone does. You're supposed to do it with your eyes. Like you got to make your the lower part of your eyes kind of come up. I don't know. I couldn't do it. I look like a freak when I tried, but that's apparently this is what you're supposed to do for these
yeah, I don't think we're the most natural photo takers. The first headshot session we had, they were like, do you want us to play some music? Like, you guys are so awkward.
Like, want to loosen up? You want to drink?
Dude, literally. But yeah, it's been a busy few weeks. Traveling, all this stuff, a lot going on, basically, without saying too much.
I got questions for you guys. I caught up with Yano. Yano did the 2049 and Breakpoint circuit for us, so I got like some of the download. But I'd be curious, what was the experience like in Asia this year? It looked like it was pretty electric.
I mean, because they don't have a domestic, and they being kind of like broader Asia, there's no like YC, there's no domestic tech ecosystem. So like crypto is basically tech for everyone there. And all of those people think about Binance, not the New York Stock Exchange, in terms of like their entrepreneurship opportunities. So Asia is just kind of always on, and it's kind of become the spiritual home of crypto, at least for now. And I think that will change when the US has better regulatory clarity. But it was certainly a madhouse at Token. I mean, we can kind of go through the quick hits of, our conversations there, but I think Berachain, with Token2049 had a particularly strong showing, and, we're investors, so we're biased, but a lot of people excited about proof of liquidity and alignment. And, one of the discussions is like, are there too many L1s? Are there too many L2s? And I think in some sense there probably are, but where the industry has struggled is like aligning them.
Yeah.
Like if you're an app built on ETH, or you ETH aligned, if you're an L2 built on ETH, and like Max Resnick, obviously hits this pretty hard on Twitter, but it is a core concern. And I think that was buttressed by the launch of network extensions on Solana, and, projects like Helium and Zeta Markets, which are pretty notable, moving towards that model. And so like our long-term thesis has been that we're going to have this multi-chain and like frankly L1 L2 dichotomy, just because there's natural incentives to sell your own block space. Just another revenue item for people, and frankly you get a higher valuation by doing so. But like addressing that and how you like, how do you get people to stop launching their own L2? Do you like just tell them not to? Do you just tell them to
You
stay on the
can't.
L1? Like, doesn't work.
I don't
Doesn't
think
work
you
like
can.
that.
Yeah.
So we're moving to an era of like the advancements in L1s are probably not like speed and cost base. I think we have an overabundance of block space at the moment, but more so like alignment. And I think Bera is kind of the one that's kind of like really tried to hit that on the head. But it's just like wild and crazy in Asia always. People are speculating. People are, what are we going to get long on? Like, what are we done with? I don't think there's a ton of takeaways other than the ETH Sol kind of back and forth, like Kyle making the Sol flipping ETH presentation. We'll see how that ages. And I think people are also excited about new chains writ large. Like the chains that are popular today are kind of things that have launched in prior cycles. But, I think there's excitement for like, there's always a market for being new to something. And be it Monad, be it Hyperliquid, be it Bera, like it does feel like people are kind of waiting for those. And just positive overall. I don't know, Michael.
Agree with all those takeaways. I mean, I think the sentiment was also something that was palpably different this go around. This is the first conference that I've seen probably in the last, I don't know, 2.5 years. Maybe like permissionless 2022. That was kind of like the last one, right? That was Miami.
Palm Beach.
Yeah, Palm Beach. This feels like the first conference, just from a sentiment perspective, where it's like, okay, everybody's coalescing around the same stuff. I heard the numbers. I think this one was 20,000 attendees. Last year, Token was 10,000. Massive scale, massive size, but a doubling year over year, I think is very positive. But it was just more like the boots on the ground sentiment. Everybody's happy, excited, working together. There are definitely like some funny moments. Looking at the videos of the line outside the club for the Bear Chain event on Monday night, just absolutely gargantuan line. Even Smokey was having a tough time getting into his own party. I heard
who here, bro?
Exactly. I heard really positive things from some of the side events too. We were investors in Open Social, but EVG had a really good presence, and they actually announced that they have 200,000 daily active users on Open Social, which it's an open platform, consumer platform. I heard one of the members of our team went to Breakpoint and said, the Breakpoint event was really, really positive. I think it was just a good time all around. And it felt like you kind of get these boots on the ground perspectives. I know when we were frankly starting Framework in 2019, we started it in July and we went to DevCon, which is in Osaka, in September or maybe October. And that was kind of like, let's like assess this whole DeFi thing. Like, let's try to figure out, whether or not this is real. And we walked away from that being like, oh, this is real. This is definitely where the party's at. And this one just felt like, oh, the party's still with crypto. There's a lot of really good stuff coming out of it.
Yeah, it just feels like, I mean, even just catching up with Yano a little bit about the week as well, it just feels like there's a lot more energy. And, he was showing me just the amount of people that were in some of these Telegram chats or that signed up for groups. Like Telegram, like Ton got like 11,000 people to sign up for their side event thing. That just doesn't happen at US based conferences anymore. I mean, just this is me with my Blockworks hat and just looking at like the US conference scene has been kind of cleared out relative to even Europe and Asia. It's a completely different landscape than it used to be even a couple of years ago. And it makes sense, right? Because, lawyers, literally advise protocols that they can't, present or talk about their protocol in the US. So obviously that's the case. Right.
Well, and I mean, that's a very good meta point too. It's like the geographical differences. I think Europe is starting to see some of the green shoots. And frankly, this all stems from regulation. This all stems from like, okay, Mika, now you have a framework for how USDC can become like one of the regulated stablecoins, DAI and the whole ecosystem around, Sky now, USDS. Like there's like paths to that. And, we like there's a really prominent protocol that we met with while we were in Singapore they were all US based and they were building this in the US. And they're like 6 months ago, they're like, nope, we're moving to Singapore now because we actually know like what the rules are. Like that, they're going to be a multi-billion-dollar protocol probably when they launch, and that is a loss for the U.S. But MAS in Singapore, there's right and there's wrong, there's black and there's white. Like it goes back to regulations, but it is very, very obvious that Asia is frankly where crypto is happening first.
The other interesting conversations that we had were with exchanges, and I think the notable points there are, the subtext of a lot of the conference and a lot of projects is like it's just harder to get listed than ever on the major exchanges, and we did an analysis of what's the last coin that Binance listed. Nero was the last one, and that's kind of an ETH-L1 meme coin.
Mm.
Who knows why they listed that, but before that it was Banana in July. And so they are really tightening up listing requirements, and I don't think those two examples speak to like the direction that they're going to, but exchanges want to see adoption, they want to see traction, they want to see earnings, they want to see all this stuff, and they have kind of acknowledged their position as like the gatekeepers to retail, which I think is a really positive sign. And so, that kind of benefits different types of projects. I would say, DeFi definitely was notable at the conference, Aave, Maker, and probably Hyperliquid as well. Just like on the, okay, they have fundamental side. DPIN, I think we're still trying to figure out exactly which verticals within DPIN have product market fit and the ability to generate earnings. But like, I think the exchanges like that category because it's tangible. You can tell what the adoption is. It's hard to bot. And then I think the last thing on exchanges is like, FTX, when it was not a scam, or maybe it always was a scam, but like they appeared kind of at this time in the last bear market, pre BTC ETH all-time highs. And I think we see more of a horse race between, people like Bybit, people like Binance, and maybe a couple of new entrants that are launching soon that will, create more of a level playing field for these exchanges where it's not winner take all. Some will be more aggressive on listing tokens, and it feels like there's going to be at least one exchange that does well, just because others are not listing things.
Yeah, just like to hammer the point home, there used to be this strategy of, okay, you build something, you launch a token, and then you launch your product. That is completely borked at this point. You not only have to launch your product, you have to be hitting, millions of users, you have to be hitting millions of dollars of revenue, you have to be hitting, whatever benchmarks make sense. There has to be real adoption for your protocol for you to even be considered getting listed. And that is like the takeaway from every single conversation across the board with centralized exchanges.
So I got a question for you guys on, obviously Base has been really successful on the Coinbase side of things. Like there's just, they're kind of growing, like a weed in terms of TVL and just assets on that platform. I've sort of heard rumors about some other exchanges launching their own L2s or chains or whatever. Honestly, I mean, there'll probably be some experiments that don't end up working out, but I could kind of see that working as well. Especially some of these offshore exchanges have huge, really engaged customer bases, and it's pretty easy at this point to spin up an ETH L2. I don't know. I could see that being actually relatively successful and just running back the Base playbook.
I think I totally agree. I mean, it's a super lightweight experiment to run. I think ultimately where you're going to need to figure out is what is the core advantage to having that L2. And I think in the case of Coinbase, obviously it's like the operating system for all the apps that are kind of like blessed by Coinbase. That's one way to look at it. It could also be sort of like the, depending on how the regulations for some of these, jurisdictions work out, it could be like, if you want to get the 50 million Coinbase customers that are verified identity via Coinbase, that's just like an immediate, user base that you could tap into. It could also be the place that ultimately, for the same reason, institutions choose to like tokenize assets. Like there's a lot of kind of ways that you could look at Base from a competitive strategic standpoint. I would question whether or not, other institutions, depending on where they are and what they are, would have that same advantage, or if they have a different one, what that advantage would be.
On that, I mean, Telegram Open Network, I think it is. I actually didn't meet anybody from Ton or any builders in that ecosystem, and maybe that was because of the incarceration, and now I think he's out of Pavel in France. But yeah, I mean, it feels like that type of play is much different than what Base is doing, in the sense that the Telegram users are, and we've done some analysis, they're much lower average revenue per user. They're kind of more akin to like free to play mobile game users. And I think in that light, kind of what you're going to see is like, the IMXs of the world, the Ronins of the world, like people that have users, but, frankly, are kind of like just beginning their journey to like, how do you monetize these people? How do you make them crypto native? We didn't see as much on Ton as I expected, at least.
I talked to one builder who's building a games platform on Ton. And I mean, the conversation is basically like, oh, cool. What are you doing? That's neat. Where are you building? Interesting. How many users do you have? And like, without even asking, it was like, well, and we don't expect that many of them are bots. It's like, I think the Ton builders are kind of like conditioned to have a very quick response to like, oh, these are real. We trust the numbers. It's like, really? Okay. I mean, I think it's an interesting point. I think the devil will be in the details in terms of, to your point, Vance, on revenue. How many of these are real people that are actually spending real money?
Yeah, I mean the other stuff on Ton is like we've seen people building on ETH, be it on L1 or on Base, and then they deploy a Telegram mini app, and you have access to the Telegram users, but you're not using the Ton blockchain, and in fact, you're using a different blockchain. And I think a lot of people view Ton as like user acquisition that's blockchain agnostic in the sense that like they're not building on the TVM, which we've heard frankly mixed reviews on the TVM, but I don't put a ton of stock in like it's a bad virtual machine, so the chain can't work. But we definitely saw people taking kind of like, I don't know, maybe it's like an extractive approach to Telegram in its user acquisition sense. And then I think the last thing that I noticed is like it's just such a different crowd in crypto than it has been, 3 or 4 years ago. You have the Bitcoiners, you have the ETH people, you have the Sol people, but you also kind of have all these like, maybe like meme coin influencers. Like I would kind of put Iggy Azalea in that category. Like she had this like really funny, I forget what it was called, Motherland party. And it definitely seems like, there's like the TikTokification of of like the new users that are coming into crypto on the meme coin side. And my sentiment check on meme coins is that like they're still there. They're doing well. Pump fund volumes are down probably 50%, 60, 70%, something like that. They're definitely not dead. I think we'll see what happens in a real bull market, if they come back. But it kind of felt like, they're almost at the end of the meme coin nihilism, end of the story. And even like Mother, the Iggy Azalea token is now like, we're building utility into it.
Yeah.
So I don't know what that says about the scene, but the meme coiners definitely were not like the princelings of the industry, like they were kind of like 6 months ago. It seems like the kind of NFT OpenSea run a little bit. And I'm not saying Blur will go or Pump Fund will go the way of OpenSea, but there's definitely kind of like these waves of enthusiasm that are kind of, coming and going.
So I had the same sort of thought. We actually had a guy Murad on the show this week, who is very bullish on meme coins in general. He's a really interesting journey from like kind of Bitcoin maxi to meme coin super cycle maxi, I guess you could say. But here's one thing that I was just thinking about when it comes to meme coins is I've been thinking recently like how big the total target market is for people who want to buy and trade meme coins, because on the one hand, it's like really accessible and very honest, and I get it, right? It's like if you just want to gamble, that's like your market. And I think there is a pretty big group of people out there who just want to push a red button and guess that something's going to 100x. But like my dad's never going to buy meme coins, right? But he will probably end up doing something like AI coins or something like that. Because it's like, oh, AI, like I'm interested in that. And I'm just wondering, when you think about, more broad adoption coming to this space, I think meme coins have really good product market fit with like a very degen, always online internet gambler type persona. But I'm wondering if it's like the biggest persona in general, because there are going to be a lot of people that's like, this just isn't for me, but I don't really know what the category is that people are going to be super interested in this cycle. So
I would say the addressable market is like everyone on DraftKings and FanDuel. They just wants to punt, $5 to $10 on something random.
yeah.
I think there is like and I listened to the Murad interview. Like I think there's a cogent bull case that you can lay out for meme coins in the aggregate. What meme coins, like the more bearish case for meme coins is like there's just so many of them, and
Yeah.
there's no rate limiter, and you can see the radium graduation rates are like infinitesimally small, and you can see it in the churn data too, where people come in, they place a couple bets, they lose, they stop doing it, and that's like the same thing that happens with DraftKings and FanDuel. So gives me a little bit more bias towards that being the case. But Murad's point is like, he's very bullish on this one specific meme coin, like SP something. I forget what it's called, but like, it's kind of like the L1, L2 problem. It's like, how do you get people to concentrate? How do you get people to align around one or two meme coins? Because you can be bullish in the aggregate, but if there's 50,000 meme coins, how do you make sure that you're in dog with hat? And that's like a really tough problem if you scale it across a bunch of users.
That's basically how I feel too. It's just I whatever skill set it takes to pick dog with hat, I'm not really sure I've got that as a skill set.
The reason why FanDuel and DraftKings exists is because you can say that the games that people are playing are games of skill. It's not just gambling; it's like games of skill, and that's literally why they can be on your phone in certain states versus not because of gambling rules. Vance and I have a lot of history in games of skill because we built one of those way back when.
Games of skill.
But I think that there is some connection to the analogy, but I think if the skill here is assessing community, because that's basically how you decide which one's going to be dog with hat. It's such a nebulous art. It's hard to say that there's a science to it.
At last, because I want to actually talk to you guys about just like changing market conditions and some stuff that's happened on the macro side of things. But I will say, I actually got to give a little bit of credit, her, Breakpoint and whatever performance aside, I've never really seen a celebrity fully cross the chasm into CT culture like Iggy Azalea has. Like, there have been a lot of like pretty, like, I don't know, like
Tom
you
Brady?
see Scott, do you guys,
Tom Brady?
Tom Brady? Yeah, Tom Brady. You know that Yano was the one who got him to put the laser eyes? I don't know if he gets credit for that, but he literally talked to like Tom Brady's PR guy and got the laser eyes up there. But like Scottie Pippen will like tweet weird shit about him dreaming about Satoshi Nakamoto. And it's like, okay, dude, I see what you're trying to do here, but you're not quite doing it. He's actually got pretty good memes. Like go back and forth with Eric Wall. Like, you got to give props where it's due. Like she's kind of assimilated to CT culture. I don't know if that's a good thing. I don't know if you should aspire to do that, but like she's kind of crossed the chasm.
She's got a vested interest.
Yeah. She does. Yeah.
Comes and goes. A month ago when it was like a third the price, it was like this is over. This is a stupid experiment. I give her credit for getting out there and doing it. The videos from that party are just absolutely.
I mean, the videos are not crazy. Are just a negative.
The Suzu video just made my entire week.
Dude, just like him throwing money and then like sheepishly like looking to the camera and being like, "Oh no."
Oh my god. Yeah. That was that's gonna get him more. Whoever took that video.
Someone afterwards, I don't know.
The AI thing?
Oh yeah, no, that was AI. It's like, no, it wasn't. I literally saw him at that event. He wasn't even there. Well, I saw him.
That's really funny. I've been blocked by Sue, so he's not a fan of Bell Curve, probably. So
that's fine.
I think that's okay. Hey everyone, this episode is brought to you by Supra, the new blazing fast, vertically integrated L1, which helps you scale your dApp. If you are a builder, you're probably dealing with some combination of cost, complexity, and fragmentation of existing solutions. So if you're building over an ETH L2 land, everything's feeling a little bit fragmented at the moment. And if you're building in Solana, everything is fast and on one layer, but maybe you're limited in terms of what you can do with your AppSpace. So Supra is rolling out a new product called Supra Containers. So you can head over to supra.com/containers. To learn more. They offer dedicated customizable app spaces running on Supra's 500,000 TPS Layer 1 blockchain. That gives you complete control over gas tokens and fees. So some cool things you can do, you get the freedom you can use your own token, create local fee markets, or even go gasless, whatever you want. So this product isn't live yet, but because you are a faithful listener of Bell Curve, you get notified first. So head over to supra.com/containers. Thank me later. All right. I want to talk to you guys a little bit about just the sentiment shift and some things like, again, it's been a couple weeks since we've talked, but we got a 50 basis point rate cut here. And there's also been stimulus over in China. So China also the PBOC did a 50 basis point cut on the monetary side. they've also rolled out fiscal measures. And I mean, it's everything from, basically like they're almost lending money so that people can go and buy stocks over there. So I think it's just one cut short of the Draghi, like whatever it takes, energy that's coming out of there. And I don't know if you guys saw Tepper, get on CNBC, and he had a pretty famous 2010 interview where he just said buy everything, and it's not the same thing. Buy everything. Yeah, futures, stocks, real estate, whatever. Just buy everything with both hands. And I gotta be honest, it's looking like things are going up. So how are you guys feeling about the old markets?
I mean, look, it's definitely, I think it became obvious in the week, maybe two, before the 50 basis points that 50 was going to be the call. But that didn't feel obvious a month ago or a month prior. So that I think was somewhat of a surprise. I think now the market is pricing another 50 bips by the end of the year. So, 100 bips, 1% in 3 meetings is pretty big. Yeah, and I think look, the China situation got so bad that it's now looking good. I don't think the U.S. is in kind of the same situation. I think what's driving a lot of the China situation stems from what has been the overhang of real estate over the last few years. It's just gotten so bad. It's become this dead weight on the entire populace there that banks need help, consumers need help. I mean, this was also kind of the conversation that we were having with a bunch of people who are more in the know than we are around China that we were having in Singapore. And yeah, I feel like the macro market is going to move from a headwind to a tailwind if it hasn't technically done that already. I think the other big variable, which it feels like we're pretty close potentially to hitting, is quantitative easing versus quantitative tightening. That may be a 2025 change. I'm not sure if that'll change this year, but it should be on the horizon next year. And yeah, I mean, that's just liquidity getting pumped back in. The things that I am curious about are how much of, a month and a half ago, there were $14 trillion in money markets in the US. Where does that money go? Is it like, where does the net, let's say, okay, it goes from 5% to 4%. You're like, 4%, not quite really cutting it for me. I'm going to take some money out and put it somewhere. Where is that average dollar going? Is it going into things like Nvidia or the NASDAQ? Or is it going into, things like crypto, higher risk, higher reward? Or are you putting that in, you're not putting that in T-bills or bonds. It is kind of the question as to like, where does the next marginal dollar go? I think crypto actually has a pretty strong positioning there as to be the thing that it seems like Nvidia has hit at least some sort of like not top, but the out of control growth has slowed. Very interesting stuff that was going on related to Nvidia this week with OpenAI. We don't have to get into it, but it's very interesting to see that happen. And then, yeah, I think, there's going to be great places to put money, and all these places are going to be, good. It's just like, how do you pick the fastest horse? And it feels like crypto's wound right now. And I think people will recognize that it'll be like a quick catalyst, and it'll just be a flood. And maybe the election is that catalyst.
Yeah, I think we have been very positively surprised at LP interest turning back on for crypto. And it's due to a couple of reasons. I think number one, the prognosis for traditional venture is just so poor. There's no IPOs, there's no M&A, that like people are like, if you've gotten, like we've heard this multiple times, if you have distributed returns in your fund to fund or your endowment, you probably are in a crypto fund, because those have been the only people generating liquidity.
Wow. From the last 7 years.
Yeah, from the last 7 years. So I think the prognosis for everyone getting a reload of capital in terms of the crypto native venture firms is pretty good. And again, it's like, you haven't had any of the major L1s launch this cycle. You haven't had any of the major crypto funds re-raise. And then you look at tech, and I think the deal with Nvidia is people are, assuming implicitly or explicitly, like, we've pulled forward a ton of growth. We still need to build all these huge data centers, figure out how to power them, and then see the ROI at the bottom line for startups, of which there's kind of been patchy successes, Perplexity and OpenAI being the big ones. And then for the biggest companies, you need to see like basically your algorithms get better, which allow you to sell more ads. And like people are just saying like that's like a next 5-year growth story. So you have the stalling out of the major tech trends. And then, the thing that I've been looking at is gold. Like, and I don't own any gold because I'm not 75 years old, but like you look at what happened in 2019 leading to 2020, gold made a move from about, 1300 to about 2000. And that was kind of when this whole like debasement narrative kicked in, where it's like, how are we going to finance all this COVID spending? We're not raising taxes, deficit spending is getting high. And like, we're kind of getting there with traditional markets right now, where it's like, be it Trump or Kamala, there's going to be a huge level of deficit spending, especially with all these tax decreases that they're promising. And so people are kind of moving towards this debasement hedge. Where does gold top out? I mean, like when gold topped out in 2020, that's when the crypto trade turned on. That was gold topped in like August of 2020. That's when people were like, Bitcoin's so cheap relative to gold, maybe we'll bid that. That's when DeFi summer happened. That's when interest rates got lowered and you were able to do things on chain and it became interesting to people. And so I totally agree with Michael. You can just tell, and you've seen some prints on the ETFs, both for ETHA and IBIT, that have been pretty monstrous. And you're like, this is coiling. And, we're, I guess, 48 days away from the election at this point.
40
days. I mean, like the sentiment 2 months ago was like, we'll see what happens with the election and then, we'll decide to allocate. But people are starting to front run that. And be it buying crypto, be it allocating to venture funds, like you're going to see a ton of capital come into the industry as interest rates lower. And I am a big proponent of like, it is as simple as the cost of money goes down and the price of assets goes up. And a lot of the sentiment, I think, can be attributed to rates at, I guess they're at 5 now, but that's still so high.
Yeah, I mean, I think we're going to see another 200 bips before all of this is done.
Yeah, I think so. I was just talking to this like very experienced macro guy, and he had a target for the 2-year between I can't remember if it's 2-year Fed funds, even though those things are pretty correlated, of like 3% base case, but like there's a bull case we even going all the way down to 1%. And
bro,
I don't know,
1%. Let's go.
I mean, look, it's this, but I feel like we have been saying this on the pod, like just wait for rate cuts. And there was this crazy narrative ahead of these rate cuts where like somehow rate cuts are bearish. It's like, what are you talking about? That is
it's a confounding variable, which is bullshit, which is rate cuts also usually stem from when there's an actual recession or an actual growth scare or actual issues. And in this case, it's actually just that our star is lower than where we are right now.
Right. Well, that's what a ton of finance is, though. It's like looking at extremely small data samples and way over extrapolating. Yeah, because sometimes the Fed does have to cut in an emergency if they sense a recession coming up, but that was just not what was happening here at all. So, yeah, I mean, I think that
all the money in investing is made waiting. Like, we did the Chainlink ICO in 2017. We waited, 5 years for that to really take off. Like we did all the DeFi stuff in 2018, 2019. That was another 3 years of waiting. And like, it's very exciting to invest capital in things, and it's exciting to sell things when they're high, but like the mental warfare you do when things are chopping around and like you're reading Twitter every day and people are like, it's going back to 13K for Bitcoin, or, it's like, fuck. And I think, like what we're starting to see is people adjust their targets higher. Like I saw a few calls for, 250K, 300K BTC with like the rest of the market re-rating to that point. And like people are starting to trot out their targets. It's like the procession of like who's going to be the most bullish. And Saylor is obviously the high mark, and I think Cathie Wood is right there with him. But you got people like Vance now.
Did you see Plan B?
Yeah, I mean, we're going to a million BTC by the end of next
2025.
year. We're starting to get there, and those targets only become credible once you're past the all-time high. So expect that chorus to pick up.
What do you guys think the reaction and general sentiment is going to be once we cross 100K?
It's going to be euphoric. Like look at the on-chain. Like ETH gas fees are back to like 2025 on some days, and the fees pick up, the narrative picks up, the price picks up, the fees follow that. There is this flywheel that takes off, and I mean, it just like crypto sounds more credible when the prices are higher. When Bitcoin's at 17K, it's like this is a scam. When it's at 100K, it's like this is actually new gold. and ETH is the new NVIDIA. And, waiting for that stuff is really hard, but that is where the money is made.
Well, it's because what it does is it puts all the naysayers behind. And we still have, I mean, just in conversations with people, that are, institutions, LPs, it's still like, yeah, well, what's the take here? And all that stuff gets a lot more quiet when you're like, oh, ETH fees are working, it's deflationary. Oh, maybe a monetary hedge for the US government in the form of digital gold, which is Bitcoin. And also, when you have a lot of this activity happening on chain, that incentivizes the growth of these platforms. Like if you have the flywheel start to pick up, these things get bigger and bigger. And I also think that that's kind of one of the other things that we haven't seen yet, sustainable growth for all of the people that have been building for the last 3 years, where if you do start to see a reaction from the market and some of the longer tail assets, incentives for Hive Mapper, Helium, Demo, DPIN start to get actually huge, and the waiting around, the mining of these these ecosystems becomes real value, which then incentivizes more activity on the ecosystems. Like all this stuff starts to feed back in an incentive flywheel if market reaction comes back. And so I think that's the other element here too, is you're actually going to see user growth once you see some of this price action.
I got a question for you guys. Completely agree with that. Just sorry to on that last point, Michael. Yeah, like I completely agree with that. And I've been saying this a lot on this podcast, but we're a media company. We have a media backend. Like we have really good data across what a bull market looks like and what a bear market looks like. And even as prices have gone up, like activity and views have gone up a little bit, but it's nothing like what 2021 was. And I think we're just waiting for there's like price leads, narrative follows, and then users follow after that. And I don't know if that's like a Bitcoin all-time high convincing break. I don't know if it's like over the 100K mark or whatever it is, but I think it's price related.
It's like binary. Are you above or below all-time high? And then it's like linear from there, where it's like, okay, we're above all-time high, it turns back on. You'll probably see it get to 50 to 75% of where 2021 was. And then as you climb higher, it's just more gravy on top. And like one of the things that we've been talking to institutions about is like, isn't there a bunch of shenanigans and riffraff and like all this stuff? And like, we're pretty clear eyed about the fact that that's a yes, but like, that's not what we're playing for. And the benefits of blockchains and crypto protocols are undeniable. And like the next era of this crypto experiment is like, we're going to build amazing things on chain. There's going to be tons of users. There's going to be tons of fees. There's going to be new categories emerging, and a lot of them won't work, but that's kind of par for the course for venture. And when you have permissionless tech and you can market tokens and put them on chain, like of course there's things that are going to hit the wall. But I think people are starting to see the forest for the trees, and the prices help that meaningfully.
Hell yeah, that's great to hear. I'd be curious, what are your guys' thoughts on just the election in general, and whether or not how that impacts things? Because like there were people were talking about a couple of months ago that it has like Bitcoin become a Trump win prediction market, and people were ascribing kind of moves in the price of Bitcoin to Trump's odds. And I will say that like obviously there's this confounding variable if you're like rate cuts and liquidity, and I don't know. I mean, like I think Kamala's chances have been climbing, but Bitcoin's been going up and crypto markets have been doing particularly well. So what are your guys like up to date thoughts?
Yeah, I think actually the most important thing is not Kamala Trump. It is actually what happens in the US Senate. Because so first off, the president doesn't make the laws. What we were just talking about in terms of geographic or jurisdictional difference has to do with a regulatory framework. We saw this with the FIT21 bill that was passed in the House. We now need to have some sort of recognition in the Senate. The word on the street, at least from what we've heard, is that the Digital Commodity Act is probably the best version of what the Senate will support. And Schumer has come out and said that he's in support of it. There's a number of people on the Democratic side that are in support of it. But frankly, this is where having a Republican Senate will just be like, we get this done in the next 1 to 2 years. And that's the most important thing that could happen for the industry. And as well as, and maybe it's like a stablecoin bill that's a sidecar, or maybe it's factored into it. Like there's questions as to like how we build this cohesive crypto regulatory framework. And so that's going to come from the Senate. The other factor with the Senate is that the overseer, basically the regulator for the SEC, who chooses the body who chooses the commissioners of the SEC, is the Senate. It's the Senate Banking Commission committee, and that I think is going to be who decides who the next SEC commissioner, CFTC commissioner. So it's just furthering the point that if the Senate goes Republican, that's it's going to be positive crypto, and that's what matters most, independent of what happens in the White House. Obviously, all the promises and things that could happen with President Trump versus Harris are real, but I think that that's actually kind of a psyop for what really matters, which is the Senate race. And right now, the Senate is like, even on Polymarket, I think it's like 76% odds going Republican. And so we're very, very confident that, independent of exactly what happens, and I think Vance can talk more about the polling, but I think that's actually not as close as people think in terms of maybe the Nate Silver election predictions. But I think generally what we care about most is the Senate.
Yeah, and the head of the Senate Banking Committee is actually this guy named Sherrod Brown from Ohio. And if you look at his odds, there's been a couple of polls where he's actually losing recently, and so that would represent a sea change in terms of who is chairing the Senate Banking Committee. But no matter who gets elected, you're going to need 51 votes in the Senate to reconfirm the SEC commissioner or confirm a new one. And I think the lessons of the last administration were like, Gary Gensler, he's a smart guy, he's done this at the CFTC, he's a career bureaucrat, let's just put him in there. And it feels like the whole finance industry is pretty pissed at how that's played out. There's just, not just for crypto, Ken Griffin at the Citadel, the Virtu guy, he's been on Twitter, tweeting like he's got 15 followers, but he's like, this multi-billionaire who's like going after Gary on Twitter. And no matter who wins, I think it's going to be a lot more of a contentious choice, just because the capital markets have come into a renewed focus. On the election as a whole, I've been public about this, but I do think it's going to be a Trump landslide. Just looking at the polls compared to 2020. And I think what you get with a Trump win is like all sorts of like fantastical promises. And, if they come true is to be determined, but like, are we really going to put crypto assets on the Fed's balance sheet? Are we really going to, do all that stuff? That's the case for, a million PTC by the end of 2025, and everything re-rates accordingly. And I think to get back to the David Tepper interview, he's like buy everything and be bullish. And I think we're pretty much of the same mind. I think in crypto it's a bit harder to do that because with the Hang Seng Chinese index, it's like allegedly higher quality companies bucketed into this thing that you can just buy and let it ride. Same with the S&P 500 index. You probably need to be a bit more choosy in crypto. But I do think to some extent it is the right take, where it's like a rising tide lifts all boats. And, I think the other thing that's more important, given, let's say that, it's a split, government, if Trump wins, if Cuomo wins, whatever, the more important thing is like where are markets at as a whole? Has the NVIDIA thing, like, I remember people being like, why would I buy Bitcoin or ETH? I could triple my money in NVIDIA in a year and a half. And that was true. I don't think that same prospect is true anymore, where it's like you're going to double your money on NVIDIA. It's going to be a $7 trillion company by the end of next year, where with crypto, I think it's like probably more favorable in terms of where is it going? How rate sensitive is it? What is the story? So I echo David Tepper's comments where he's just like, I don't really care who is president. I do personally, but like, I think it's just bullish no matter what, because of the larger macro landscape.
So just it came out this week, and I dug pretty deep into it. But if I would encourage anyone who's interested to go check out the Gallup poll that came out this week. And what this is, you've got Fox News, you got CNN, you got ABC, you got YouGov. There's so many different polls, so much data. To Vance's point, if you're going to look at any of those polls, go to Real Clear Politics and look up how that polling fared basically in the 2020 election cycle, and look at the bias. And so it'll have a margin of error, but it'll have a bias, and then it'll say, where did that bias trend? Basically, every single one of these polls is plus or minus, is plus 2 to 4%, leaning almost 75 to 80% towards the Democrats. And so go back and look at some of the polls, and basically, if you assume that these polls are accurate, you assume that somehow polling has changed in the last 4 years. I'm not sure that that's the case, but to go back to the Gallup poll, one of the things that Gallup has been doing since the 30s is actually asking the American public over the course of July through September of an election year a number of questions. It doesn't have to do with specific candidates, but it's party affiliation and lean. And then questions like, which party is best fit to handle the most important problem? How do you view the economy right now? Is the current sitting president doing a good job? It's like where you get all of those types of polling answers. And Gallup came out with a poll, and they show a chart which is pretty insane, which is basically like the percent of people who lean Democrat or are Democrat and lean Republican or are Republican. And this is historically the best indicator of the popular vote. And just to give it as an example, in 2016, it said that Hillary would, or the Democrats would have a 3 percentage point advantage. Hillary won by 2.5%. In 2020, it said that the Democrats would have a 5-point advantage. Biden won by 4.5% in the popular vote. And for the first time in 35 years, the Republicans actually have the lead in these polls. It's 48% Republican, 45% Democrat. And even going back to it, the closest that it's been historically was a tie in 2004, which it's post 9/11, it's Iraq wars going on. Bush was in office. That's, Bush won again for a second term. But for the first time ever, the Gallup poll, or for the first time in the last 35 years, I don't have the data going back to the 30s, but since 1992, the first time Republicans have an advantage, and it's a 3-point advantage.
Michael, why is it slanted towards the Republicans or towards the Democrats that much? I thought, I could be wrong about this, but I thought Republicans won more presidential elections than Democrats roughly over the last 50 or so years. Why is there so much slanting in the data?
This is just the polling.
Yeah. And the reason why people pay attention to this Gallup poll is because John Gallup literally invented polling in the US, and like they were doing it, 100 years ago, and people were like, how can you survey 700 people and get a representative sample? And like he literally pioneered this. So I think this is kind of the highest quality poll that you could pay attention to if you're going to pay attention to any of them. And there's a lot of different indications that you can kind of see in terms of, is the electorate really shifting to the right? You have another poll that people put out. It's called the Generic Congressional Ballot Poll. That also shows that there's been probably a 3 or 4 point shift at the national level towards Republicans. And then you look at things like, early voting by mail is starting to come in, and that's shifting Republican. And then you look at registrations, which not all states have, but a lot of the most important ones do. And Republicans are closing the gap on Democrats. So, those are things that lead us to believe that it will be a pretty big Trump win. But, we'll see. I think the interesting thing is that whereas 3 months ago, maybe it wasn't even 3 months ago, Trump got shot, this was pre-Biden dropout, but like post him, kind of shit in the bed at the debate. People were like, the odds on play market got up to 75% Trump. Right now it's still, in the Nate Silver average, it's like, 50-50, play market's 50-50. You go into election night with a 50-50 split, at least on these betting markets, assume that's a proxy for sentiment. People are unsure if he's going to win. And like, I could very much see that election night being the start of this melt up.
I heard a hot take this week, which is one of our founders has been doing a lot of market research, talking to a number of poly market whales. And a lot of the data that he's gotten from them is that the way that they look at poly market is that they view poly market as a way to hedge in the case of a Kamala win. And so that there may be a bias for people who want to, it's a hard thing to do. Like, how would you hedge I guess you could like, hedge crypto prices or something like that. But if you're thinking about markets being in a negative cycle post Kamala in some way, shape, or form, it is a way to hedge.
Yeah, I mean, it's obvious what you do if Trump wins, right? You buy everything. Probably you just buy the highest risk, uh, most interest rate sensitive assets, which are crypto. If Kamala wins, what do you buy? I think, over a few month time horizon, people are like, well, we're still doing deficit spending and interest rates are going down. So it is like a risk asset market. But I think in the interim, it's like there's no clear Kamala stock. Like there's literally even a stock with DJT, the DJT owns 60% of. Like if you are bullish, his chances, like people along that. But it is a very clear hedge to just buy Kamala. And I don't think, Citadel is getting long on Polymarket, but it does feel like that's an
No.
option for a lot of people.
Yeah, I don't know about the asset price stuff. I'm assuming that I'd just be more bullish if Trump won. But my the way that I just have like a my Blockworks hat on when I think about a lot of these questions, and I just think about like the environment in the U.S. versus other geographies, just from like a media and research and overall activity standpoint. And there's actually passing regulations, which is rules of the road, etc. But I really think the damper in the U.S. has been the indictments and the SEC activity and all of that stuff. Like, I mean, literally to the point where legal firms advise protocols not to talk at conferences here because that could be used against you in a potential lawsuit later on down the road. I mean, that is so damning to this geography. And
or CFTC and SEC showing up to conferences to try and see if they can catch you in a false move like
yeah,
that has happened multiple times.
yeah,
It's insane.
yeah. So look, all of this stuff, I mean, I would love it. Like, let's get regulation passed. It actually feels like something like the stablecoin bill is not that difficult and a huge win for everyone. But I would settle for really just people not worrying about getting arrested on U.S. soil, which is crazy, but that is the bar, I think, in a lot of these cases. So
I think that's totally right, and I think that does end if Kamala wins. If it's just like I feel like we've gotten to that point where like enough is enough, and
yeah,
people are realizing that on both sides of the aisle. I think the sentiment right now, to me, it's like it's very hard to focus large amounts of the planet, large amounts of America on one thing.
mm.
It's like you got Hawk Tuah girl, you got,
She's got a
all this shit
podcast
that,
now.
she got a podcast, all this shit
Talk
happening
to a
this
girl
year.
now.
I can't even like think of like what the major narratives this year have been, but I'm assuming it's like all pop culture. But like there was that moment during COVID where we were all living the same thing. We were all focused on holy shit, what's happening. And for the
Tiger
next
King.
40 days, it feels like we're focused on the election collectively. And like, obviously people have different views on who they want to be president, but like we're all focused. And then, you have that event horizon clear. And then kind of what do people think about it? I think people think about the next 4 years of their lives and what that looks like. And I think, a Trump win will have people thinking about, I need a second house. I need a beach house. I need more risk assets. I need to be very long in this America comeback story. So I think it's a great chance to reset sentiment. You have this very concentrated period, like right at the beginning of COVID when everyone was sheltering in place. And then you have kind of like this like moment of like, okay, we're not all gonna die. Maybe we all will get sick, but like what does the future look like? And the future is bullish. I think, either candidate. But I think if Trump wins, it's gonna be like Americana effectively.
It's the 2020 equivalent of the stimmy checks hitting your bank account.
Right. It's a big stimulus check. And I think in some cases that's going to be more literal. You know, corporate tax rate down to 15%, SALT, which is the state and local tax deduction for states. You can deduct your taxes paid against your federal income bill. You have fiscal stimulus, you have quantitative easing. Like, I don't know if you could draw up a more bullish picture with people coming into election night 50-50.
Well, I mean, 40 days away. And for me, again, like I think that a lot of this activity in Asia is because, crypto's a global market and there's a ton of people outside of the US, and we're in the US are probably guilty a little bit of being US centric, but also it's because we've pushed a lot of activity out of the US. And, I don't know. I mean, we can do it for a couple more years, but at some point, right, you push the activity out and it's like, hey, it's actually pretty good over here. I'm just going to stay over here. And I think that's already started and has become That's already started and become somewhat permanent, I think.
Think about the hurdle that it will take to take these billion-dollar, multi-billion-dollar decacorn level protocols that move to Singapore and get them to come back.
Yeah.
Like they're gone.
Yeah, they're gone.
So you either got to hope for new things to come around or something to get so good here that it pulls people back. I don't see the latter. I think you got to hope on new things happening. Obviously, that's our bet as well. New things will always be coming out, but it's like a sad fact that we have pushed a lot of the activity to places like Singapore.
This administration and specifically the SEC has. I don't think that persists in either administration.
No, I agree with that.
So I think the picture is maybe rosier than we're making it sound. If Kamala wins, but man, like you even look at the Y Combinator class that just was inducted, and they're going from 2 batches a year to 4 batches a year. They need more shots on goal. It's literally all AI companies. There's no crypto companies, and the AI companies are still in this, like Wile E. Coyote runs off the cliff and they're just running. And, maybe they get to this other cliff, but maybe they kind of fail. Like the AI startup prognosis, if that is what is going to be powering the innovation economy in the US, I would say it's pretty negative. So the US needs crypto as much as crypto needs the US. And some politicians realize that.
And just to double click into that specifically, like it's the Mark Andreessen, Ben Horowitz take, which is like little tech, big tech.
Right.
What crypto enables is little tech. Fundamentally, it's decentralized, it's egalitarian, it is something where you can compete at the level of competition that doesn't have unfair advantages. AI is structurally the opposite of that, which is Larry Ellison was just on a conversation, and he asked the audience. He pulled the audience and he goes, "How much do you think it'll take to build, a foundational model in the next 5 years?" I think it was 5 years. And someone goes, $1 billion. Nope, not $1 billion. $10 billion. Nope, not 10 billion. No, it'll cost $100 billion if you want to have one of the large foundational models. And how many companies in the world have the ability to do that? Probably like 3, maybe 5. And the only one out of something that was a company that was started this decade is OpenAI. And they've been we'll see if they can get this round closed. I'm sure they will, but like they're chipping away at that 100 billion, 5 to 6 billion at a time. And so that I think is the difference here, which is it's not going to be little rinky-dink Palo Alto startups that are able to like in a garage grow to be Google. It's going to be the ones who can raise the most amount of capital.
I got a question for you guys. So do you think that AI, so first of all, my understanding is the AI business model outside of like if you own one of these large foundational models hasn't really been figured out yet 100%. But I will say even on the Blockworks side of things, like AI has crept its way into our product roadmap. And like we're in the stage right now of like building things out for next year. And the stuff that our engineers and even like relatively like not super sophisticated tech people on our kind of like product and data team, like some of the stuff that we're able to build is pretty nuts. And it, for relatively low cost in a pretty short period of time. And it just kind of makes me wonder, it's like, it makes you kind of squint at this like B2B SaaS business model and be like, how defensible is this business model really? Like if you've got, people, relatively, really brilliant, but like, relatively inexperienced people being able to spin up, features that could have been a fully loaded, company that you raised $10 million for 5 years ago.
So
hold on a second.
Oh, who was that? There's some publicly traded company that on their earnings call,
Klarna.
Yeah.
Just said that they are ripping out all of their human capital management, their customer resource management, and their financial management systems, SaaS providers, because they're just going to use AI tools to build these things in-house. That is, I think, a seminal moment in terms of not only are you taking some of the opportunity for new entrepreneurs to come in and build startups around AI that have, the diaspora of different products and features where you can, go raise $10 million and build a $400 million company kind of thing. You're also deleting business opportunity for existing SaaS businesses who are just going to in-house this. But going back to it, Mike, it's not like you're going to have some rinky-dink startup who's the one that's building
you're right.
the model that helps you build that software in-house. That's going to be Microsoft, who through their model and Azure and Copilot through GitHub are able to enable the software development just to be like one click and boom, you have it. And so it just goes back to the point, like AI is fundamentally centralizing.
Yeah, I agree. I totally agree. And also, it's just like the business model of the US in general is like, hey, we have this great system that enforces property rights, and come build your thing here. Like, come innovate here, and we'll make sure that we get a cut of the innovation. So, yeah, I agree. It's in the US best interest to foster this kind of stuff. The last point, too, about just like regulation as well, it's very difficult to be overactive on the regulation side of things when prices are going up, right? Like, there's just not very much market for that. And there is a, as prices go up and people are making money, no one wants to see a Gary Gensler type come in and ruin the party, right? So I do think, not to make it all about price, and there obviously are, but I really do think I agree with Vance. You said that I think even if we get a Harris administration, they're not. I don't think, my personal opinion, not Blockworks, whatever. I don't think they're going to be as friendly, as a Trump administration would be. But I also don't think it's going to be the end of the world either.
Yeah, I wouldn't pay too much attention to who went. Like, look, we all thought Gary Gensler was gonna, save the industry and
I
put it on this
know.
new.
Yeah.
Totally wrong. Totally fucking wrong. Like, it's neither as good as you think it will be, nor as bad as you think it will be. The most important thing is, what is the cost of money, and what are the alternatives to allocate to.
Well, and yes, that is 100% true. I think the reason why, that was such a miss is because until recently, until like this year, nobody fully grokked the fact that it wasn't actually Biden who was running, the financial side of the cabinet or the financial side of the administration. It was Elizabeth Warren.
Mhm.
And, her ideal situation would be to have the US banking system run by the Postal Service. So, that's like the base that we're starting with in terms of perspective. And so I think broadly, it really does depend on who's in these roles in each of these potential administrations. I think we know what it'll be if it's Trump. I think that there's potential positive movement, but I think now what has happened is the industry is so big that it's not something that a reasonable person is going to be able to step into any administration and expect that they're going to be able to snuff out in the same way that Elizabeth Warren did in 2020. And so I think we've jumped the shark in that respect. And so I think that's why, frankly, no matter who the president is, there's going to be constructive, policy movement no matter what.
Fairshake, which is the largest crypto super PAC, them spending $180 million. It's the largest super PAC this cycle. Like, crypto is on the front page of Politico in terms of Harris's shift to being pro crypto is fragmenting the Democratic Party, and those are headlines that you would never ever see 2 years ago. It would just be crypto getting punched in the face, crypto being like, okay, we're sorry, and then just like more punches in the face. Now it's like a fair fight. And I think, to Michael's point, there is kind of like this larger concept of like whose stock is rising and falling in U.S. politics. Like, I think Elizabeth Warren's stock has fallen pretty dramatically. And I think about like who the rising stars of the Democratic Party are. Some of them are Gen Z. Some of them are people like Richie Torres. Some of them are millennial. Yeah, Richie Torres is amazing. But like, there's now a carve out. There's like, Wiley Nickel, who's the senator from North Carolina, is pro crypto. Like, there's a ton of these guys. And like, you have to identify with a faction if you're going to be a senator or a congressperson. You can be, historical Black Caucus. You can be, the Tea Party guys. But you can also be kind of like this moderate Joe Manchin, pro innovation pragmatist now. And that was also something that was not apparent, 3 or 4 years ago. So I think it's really positive. We're very, very bullish on crypto right now. If people can't tell from the use cases we're seeing to the entrepreneurs that we're seeing, and look, there are not nearly as many entrepreneurs coming into this space, but the bar is so much higher for people who do want to do crypto things. That they usually know why they want to do it. They know what it's valuable for. And it's not just people launching tokens. So it's a very positive turn for the industry.
And maybe one element that I'd add to that, which is less hard to see from, unless you're frankly sitting in our seats, is just the respective perspectives from the institutions and institutional LPs that we have conversations with on the regular basis that are looking at, okay, where do I put my, $10 billion endowment? Where do I allocate that to the innovation economy in the United States or elsewhere outside the United States? But the relative trade-off, as we're discussing AI versus crypto, it's going to be tough for venture funds and the venture land ecosystem, the non-crypto venture fund ecosystem over the next couple of decades, as you start to get some of the DPI and multiple numbers from those vintages, that it'll be tough. And so I think in terms of how does this whole ecosystem continue to proliferate, there is an element of what are the institutions doing, because that's how we get capital, which we can give to entrepreneurs who are building the coolest things.
Totally. All right, fellas. It's been good. I don't know if you guys have anything else that on your plate. This might be a more of a New York centric story, but I don't know if you saw Eric Adams is getting indicted, our mayor.
Because he got some first class seats and a hotel upgrade.
It was like less than 150 grand in bribe, in like favors. Yeah,
$120,000 in favors.
Dude is facing 45 years in prison.
Look, Mike, I love to visit New York. New York is becoming a very scary place to do business.
Yeah.
Oof. Even have a place it's like, oof, yikes.
Yeah, man. It's I just what always surprises me about these bribery stories is how little it takes to purchase that political favor in the US. It's like that just
what did he do though?
He
expedited the Turkish embassy being redesigned to like
no, just like getting the fire marshal to like review it.
Yeah.
By the way, not saying that this is ever anything that any of us have ever explored, but there is a function within departments of building and water within major metropolitan areas called expediters. Tell me the difference between an expediter and a briber.
I don't know, man. It's a thin line.
I don't know. It's just the era of maximum political violence is crazy. Like, oh, you want to be the mayor? Your upside is maybe you become a senator someday. The downside is you go to prison for 45 years. Like,
sucks. Yeah.
It'd be good to lower the temperature, at some point. Although, I'm not sure.
Just to call it out as like a stark contrast, and I was actually talking to Yano a bit about this and some other people in Singapore as well, and I think Yano talked about this on the podcast. The difference in Singapore politics versus the US is insane, in that the smartest, the most gifted kids are identified in like elementary, middle school ages. They go to a different high school, they go to a different college, and then they go on a political track. And it is one of the highest paying jobs you can get, which is a government job. And it's one of the most esteemed positions you can have because it's the most gifted kids. And think about that in contrast to our political process and the people that are running for office. And I mean, obviously you can't apply, a 6 million person city state to how we should run the United States, but it is an interesting dichotomy in terms of, how you can make politics way better as if you just got smarter people in place.
I have a buddy who I used to debate this with all the time, but yeah, it's basically he would reference the Singapore approach as well, which is, do you pay your politicians a lot or not? And we've decided not to pay our politicians a lot over here. And guess what? You still need to be really competent and you need to work really long hours. So, how are you going to get compensated for that? And it's these weird, grifty backroom ways that because obviously competent people are going to seek out compensation for their
trade
work.
Some stocks.
So, we're going to give you some material non-public information, and that's, worth its weight in gold, literally.
Yeah. I mean, Pelosi's been crushing the returns.
Paul Pelosi.
All right,
let's call it.
All right, fellas. Good one. See you next week.
Later, guys.
Bye, guys.